All right. Happy Thursday. All right. Hit it, monkey. Here's your daily update. Let's do it. Today's the SPY. I'm going to cover a little bit about a new member asking about Bollinger Bands. So I'm going to cover that as well. All right. Here's the SPY today. Was really neat. I mean, it got really excited earlier in the day. It got as low as 91.96, I think. It got down pretty low. I mean, 196. I think it got down and it came back. It recovered a little bit. But here's what I'm happy about. Um, IB rank is at 47.97, almost 50. Okay, on the years it broke above 50, so I want to see this follow through tomorrow. Here's my all OBV on balance volume. A lot more sellers than buyers, and it's at the low it's been in the last few months at least. Okay, the good news is it's this low, and this hasn't dropped down as much. Remember, when it got this low over here, your slow stochastic was all the way down here already, which means it's oversold. Usually it's about time to recover, and surely that's what happened, okay? The good news is that on balance volume is down here, and the slow stochastic is still up here, so we got ways more for it to drop, hopefully, which will bring this down, and more importantly, all I care about is this. I want to see this spike up. So I'm hoping that'll happen tomorrow, and I'm going to start placing on some golden geckos on the SPY. Okay, and I might adjust one of my put positions. I have a put position on at 192, so I'm still fine. I just want to test. Karen likes to move her positions once they get to 70% out of the money. So she tries to avoid trouble by just not getting into trouble. So that's what I want to do here. Now, I'm also looking for the 13-day moving average, which is this light blue line here, to cross below this pink line right here, which is a 21-day moving average. When that happens, you're going to see a little yellow arrow up here. When it crosses above, I get a little blue arrow, like a green arrow like this, and it signals an upward trend. I see that happening probably tomorrow. See right here, there's this yellow arrow. That's when it crossed down, and it's usually an indicator for a downward trend. It didn't last very long here, though. Now let's take a look at the ES. Oops. Okay, so the ES, as you can see, it kind of recovered after hours. It's a little bit positive, but not much. It's basically flat. It's up 2 points. Here we go. So here's the ES, the E-minis on the S&P 500 futures. Okay, these blue lines are the Bollinger Bands, and I'll explain that. I had a question about that today. All right, this is the after hours. This is right now. This is where market closed today. As you can see, there's this yellow arrow here, which means the 13-day moving average crossed below the 21-day moving average today. IB rank had a nice pop. See this? The sucky part is earlier today, this was above 50. I think it got as high as 52, and it retraced back. Okay. On balance volume, it was lower as well, but it kind of now flattened out. I'm hoping that this is temporary and it'll drop down lower, because as you saw on the SPY chart, I want this to go red. I want this to happen right here, and it'll go. Okay, so right now we're right to compare. We were right here and went red. You know, it's a little higher than here. But when this went red, this went already red. So we had this nice, smooth move downward, okay, with the yellow arrow here. I'm looking for the same, but this might be a little bit more drastic, actually. So IB rank might pop. See how aggressive this volatility rise was here? We're looking for the same thing here. So tomorrow, I'm looking at putting on some positions already on golden geckos because I like this vol collapse. I want to sell volatility at a higher level and collect more money. Okay, because when volatility is high, you can collect more money when you sell your puts and you sell your calls for the golden gecko. Okay, that's what I liked about that. Now, Bollinger Bands. I have my Bollinger Bands set. If you go to studies here, and I go to edit studies, my Bollinger Bands are set at a 2 standard deviation level. Okay, so what that means is this bottom line right here, which is at, if you look at that, it's at 195, 1956. Oh wait, let me go back to the SPY and cover that. It's easier. Okay, here's the SPY. I'll zoom in again right here. All right, as you can see, this upper Bollinger, the upper Bollinger Band is at 201.61. What that means is that would be a 2 standard deviation move today, not in 45 days to expiration. That's today. And if you look at, so remember that, right? 201.61. Let's go to Dole. Okay, here's SPY. I'll do a golden gecko right here, right? And I have it at 1 standard deviation away. And let's look at the strikes, right? 45 days to expiration. Hit go. Here, also, what's important about tomorrow is tomorrow marks 56 days to expiration. That's the number of days to expiration that Karen, the super trader, prefers to start selling premium. Okay, and then she turns them. She'll put them on, take them off, put them on, take them off, and then around 40 days left, she kind of lets it expire. Okay, but look at the 2 standard deviation line on right here. Look where that is. See, let's drag this sucker up here if I can get it to move. Let's try and drag this. Can I get in there a little bit? Oh man, you know what? After hours, maybe it's screwing me up. What's going on here? Oh yeah, see, it's all off. Hold on, why is it doing that? Let me check something here. Close this. I'll do the trade page again. Choose strategy. Let's just do a strangle real quick. Oh yeah, this is all wrong. I don't know why it's doing this. It must be because it's after hours. I might have to clear my cache settings. Oh wait, let's try something else. Let's try SPX, see what happens. I don't know why, it doesn't usually happen. Maybe this would be better. See, I like that. Look at that. Look at that nice IV rank. We haven't seen that in a while. Well, July, but we haven't seen it. Alright, let's go. Yeah, see? It's a 2 standard deviation move right now would be around 209 or something like that on the high side. Let's go this yeah, like we said, 201.61. So wait, let's just go like this, easier. Same numbers. Yeah, 2011.66 would be a 2 standard deviation move to the upside as of this day. So if we go back to Godot, a 2 standard deviation line right here is pretty much there. Okay. Now, but look what happens if you want to know what is my 2 standard deviation mark, 45 days to expiration. Okay, we'll do a strangle real quick. Here we go. I'll change this to 45 days. Although 56 days is what Karen uses, but it doesn't matter. Okay, look, a 2 standard deviation is all the way up here. Okay, so in 57 days, the 1 standard deviation line is 2090 on the high side, on the call side. 2090 is all the way up. Oh god, I gotta zoom out for that. 2090 is all the way up here. You can't even see it on the chart. See, this is 2050. So can you see that? Oh, my bad. There we go. See, this is 2040. 2050 is up here. Go to Dole. For a 57-day expiration, so November 20th, a 1 standard deviation move is 2090. A 2 standard deviation move will be all the way up here. Now, in markets where there's a lot of volatility, Karen will start selling will start doing this. She'll sell puts and calls depending if the market was down. Like today was a down day, so she'd sell puts. You know, right here, about almost 2 standard deviations away. Not quite, but roughly around. Right, she does like if in high volatility, she likes to do like 95% out of the money. Okay, so not quite 2 standards away, and she can still collect $863 per contract. Each trade she makes is about 500 contracts. All right, but just to give you an idea, that's what those Bollinger Band means. What I use them for is I like to see if they're narrow or wide. Why? It helps me know if I'm expecting a larger move or not, and sometimes even if I want to do a strangle or that new test, which is a straddle. So for example, when I see Bollinger Bands wider like this, see how wide they got over here? Look where IV rank was. Okay, even though IV rank was low and it's wide like this, okay, I expect the move to be narrow like this because it's got to narrow out. Okay, that's why straddles might be good on those types of sales. I'll cover that later, but you can still, you're not expecting a large movement in the stock price. Okay, so you can kind of gauge that with kind of your bias on where you're going to do your golden geckos and combine that with your IV rank. Now compare that to something when it's narrow. See, like look, right here, it got what? Oh, even right here. But anyway, see how it's narrow, right? Oh, we're gonna go back a little bit more. Here, see how it collapsed and it got narrow like this, and IV rank is like this. Okay, so I'm expecting a move. Okay, so when I'm expecting a move, all right, I want to make sure my strangle stays within that one standard deviation range. Okay, and here's where I use them off. Okay, like if I'm expecting this to, if I'm expecting the Bollinger Bands to expand, that means the stock price has to move pretty far in one way or another for this to expand. So what? Here's how I make my decision, or here's what helps me make my decision on which way I want to skew it. All right. IV rank is low. It's supposed to go high. IV rank is supposed to go, higher. But I can't sell anything here because it's not IV rank's not high. So let's scroll to something where I could sell. Perfect. See this? IV rank's higher, so I know you're going to be selling. Well, look, narrow move, right? So if I see IV rank higher like this, and I see a narrow move, I want to skew my golden gecko to one side or the other because I'm worried about my price being tested, right? Okay. So over here, it's hard to tell which way to skew it. You know what I mean? Because look at your I don't know why this is not working on balance volume, but sorry, because that's what I use. Let's go to the SPY. You might be able to see it. All right, go back to here. So when I see something like this, and I see, and now the IV rank is not going to work. Oh, there we go. See, when I see IV rank high like this, and the Bollinger Bands are getting wide, I'm expecting a wide move because it's been narrow for so long. I'm expecting a stock to move. But which way should I skew my golden gecko for? Well, all of a sudden now I have an idea, right? Look, okay, high IV rank, right? This is going red. This is going red, and I know the Bollinger Bands have to expand. I'm gonna skew it to the downside. Why? So in 45 days, I want to, just in case, I don't know how long it's gonna, you know what I mean? I want to make sure I stay within that range. So I'll skew it towards the downside, and it did move. And look, it did come back, but at least from this date, see, okay, so this is 194.40, right? At expiration, which was, let's say, this past month, 45 days, right? If I sold the ones that expired on in September, look where the stock price ended up. See this cross here right here? Where's it line up? 194.18 around, right? So look, I skewed it bearish, means I was just in case it would down further, but I still have positions on both sides. So I still fell right in that range. Okay, so same thing. Um, at this point in time, I'll probably do golden geckos on maybe a little bit bearish, skewed to the bearish side. So if it drops down and maybe tests this, which is at 187.69, I should still be okay. Look where that is on the SPY. I hope this works. Remember, what did I say? 187.69? Ah, crap. So I don't know, Doe must be offline or something. But I'll go back to SPY. 187.69, so 18,000. Okay, so wait, SPX, what did I do? SPX. Okay, so look, 45 days. Look how low 1879 is. It'll be past one standard deviation, see? 1879. Oh no, actually 1879 is up here. What did I say? 1879. Let me see something here. Where is this 233-day moving average? So I will be that's beautiful. I'll even be protected below that. See, look at that. This is 1890. What is Dole telling me to do? One standard deviation is, see, 1890 is up here where that support is. Golden Gecko will protect you all the way down to here. You're protected all the way down to, do a strangle, one standard deviation away. You're protected down to 1845. So even if the S&P 500 drops all the way down to 1845 right here, you still make money. Okay? That's what's good about these golden geckos. Now let's see what happens if I skew it. 2 strikes down. Okay? Look,